Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today and what does it tell us about the coming ones. I do the show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. You can subscribe to it there and get notifications when any show is available. Talking about available, well, we've got a market that's available for anyone that wants to buy, it seems. Another big day up. A total surprise to me, probably to many. He started with a gap up this morning and never looked back until late in the day when an Ebola scare in New York City dropped the S&P about 12, 13 points on a dime. And so it still ended up strong across the board. Gold got whacked. The dollar was stronger again. We were talking about a pullback here. Bonds actually got whacked again. They're pulling back to that those swing point highs now. And, you know, it's an amazing market sometimes, and when you get a setup that says, hey, this should happen, and it doesn't happen, well, then you kind of have to scratch your head and say, okay, am I reading it wrong? Or is it kind of like a one-day fluke? Or am I just, totally off base? It's either the market not quite giving you the right signal, or you're not reading the signals right, one of the two. And usually I defer to the latter, saying it's not me, it's me that's not reading them right versus the market, because usually the market will tell you pretty much what it really wants to do. So as far as last night, I was thinking, okay, we're gonna get a pullback off those 2-bar reversals, and if we pull up the S&Ps, you can see here we had that 2-bar reversal last night, at least the setup. Now, the one thing that's hard about this, and I've never really codified it, and that is this whole concept of an extended move. Is this an extended move? Well, it looks pretty extended to me. It definitely would fall. I don't know how I would ask for more of an extended move. But yet this market did not pull back on that 2-bar reversal. An over-under, slightly less volume. Now, I guess if there's anything wrong here, it's the volume wasn't that much less. It was a little bit less. But still, that should have triggered. We should have pulled back, but we didn't. So if we don't pull back, and if you remember, we had just gotten over that retest regen area off that prior swing point high. So if you can't pull back on a 2-bar and, trade lower to sideways at least, and you instead flip around and you go right back the other way, well, that's just saying this market wants to go higher. Now, again, we're still extended here, right? And higher to me is this congestion area here. So we almost got there today. As a matter of fact, we got into the bottom of this area today. And so, the bar I would be looking at here in particular is this one, which is the breakdown bar. And so if I pull it up here and look at the top of that, it's 1967 and a half roughly. We got up to about 57, I think, 61. So 61 was the high today. The target was about 67. So you got within 6 points of it. Maybe we get a break here, and then you go sideways, or you start congesting out here, and then you test it. But that seems to be the key test that's left. And I think I'd drawn it here. I know I've drawn it for members. A range that includes that high, probably down to here. And you're almost there. And so, if I'm trying to buy stocks, it's kind of hard to buy them up here. Now, if you get over this, it's the highs. There's nothing left. There's a swing point high here, one there, right, and one at the highs. So you've got multiple swing points lined up on the top side. We know the MTTFs have reset. So we have all the conditions, for another leg up. It's just that I don't see how that leg up is going to come straight up and just keep going. And anything in this market on the top side is possible, but that's kind of a far fetch. Are you really going to do a 10% move straight up? I don't think so. I'm sorry, I can't crawl into that camp. You're going to get some sort of sideways to down action here at some point. Maybe it comes off the test of this. Maybe it just comes out of the blue. Just like that Ebola scare. I was out taking a walk. I came back, and all of a sudden the market's diving, and it's like, okay, what hit this thing? There's going to be something that just turns up. But the key today to me, and to try to emphasize that and not to make any excuses in terms of the call, is that it went up. If it goes up, it tells you it's stronger than you think. And so, if it should pull back and it goes up, then it's stronger than you think. And so even if you get the pullback, that suggests that this market is a lot stronger than you think. And you got to keep that in the back of your head, because that suggests to me that we're definitely in a range trade. We're not going to break no bottoms anytime soon. And, you're going to have to trade it as a range. Now, the later part of the show here, I'm going to talk about what it means to trade it as a range. But for now, let's pop over and look at the rest of these. So the Dow Jones gets over, a little bit more volume. All of these are over the retest regions for those that had it. NDX or the NASDAQ composite, same thing, a little bit over. If I look at the NDX, and these are all going for the same price points right here, right in this whole congestion area, almost up there. Yeah, those volumes were really tight last night, so I guess that was really the only signal on the 2-bar that suggested it might fail. And then let's see here. Let's go to the Russell. On the Russell, okay, so the Russell, did it close over? 1117, you close at 1116, and you do a little bit more volume. So now the Russell is attacking this high. That high is 1123.94. And if I look at the weekly on the Russell, tomorrow's Friday, and it's trying to get over this first breakdown, and that's 1115.04. So right now, it's just over it. And again, as you know, you'd like to see, at least 2 bars over it. And if they close over it here this week, then one more week would give you a fairly good feel that this range is, it's back in that range, and it's going to try to trade higher. But certainly this is the dog that's kind of being pulled up by everything else. So in a nutshell, the market is stronger than we think. And the calls last night just turned out to be plain wrong. It did not do what we expected, and we have to respect that that's the way it is. And if we look over at the sectors, they definitely echo that. I mean, remember last night you had almost every sector either a 2-bar reversal or a bearish retest regenerate taking place. Tonight, every 2-bar reversal failed. IBB goes to new highs. Talk about a reversal back up. What is that, 50 points straight back up? 20%? Well, it's not quite 20, but it's a big number. IYT was a 2-bar reversal. Goes up, has more volume tonight, so it probably is going to try to go up again. The SOX is still doing that retest regen. It couldn't get going today. That was the only one that didn't do anything, along with the XLB, which actually has some volume coming back down. Caterpillar pushed huge volume into this, I believe, but it did close negative, so it looks like a negative bar. XLE really couldn't do much today, but it certainly didn't back off. The XLF had that 2-bar reversal and actually went up higher again and has higher volume again. So it will probably try to test higher. XLI, we had Caterpillar on the materials. You had, well, actually, Caterpillar probably falls in the XLI along with 3M, which also reported today, and both of those were helping the Dow. XLK had huge volume today and pushed higher. It's over its retest regen zone now. And so you can just see every one of these. And if we go to the two safety plays, which yesterday attracted money, XLP closed slightly negative today, but almost even. So it really didn't give up much. And the XLU actually went over, back under, a little bit less volume. That one may finally pull back, do a retest regen off this high. But across the board, folks, strength. The only place we didn't see strength was over in the world markets, and we can look at those in a couple minutes. So, the synopsis here is a lot stronger than we think. I still would argue that you're going to get a pullback here at some point, but it's not playable anymore. I mean, we just got proved today, if you were trying to short today, it was not a good trade for you. Or if you took a short last night, just not a good trade, because this market opened up, gyrated a little bit, but it actually opened up over the highs on the NASDAQ and on the Dow. And then S&P wavered right at the highs, and then eventually they all broke higher and just trend day up until we got the Ebola scare late in the day. So that's really the synopsis. I wouldn't be buying up here, but at the same time, it kind of changes my whole outlook about how strong this market is, and that's something I'm going to have to respect going forward. So let's look at the world markets as we segue into the next section here. If we look at these guys, I still do not see, well, let's go back and look at it a different way. Back about, 6 weeks ago, 8 weeks ago, the world markets were kicking, right? I mean, they were all at highs. We got to go back to beginning of September. So, 8, 9 weeks ago. They were all at highs, almost every one of them. And our markets were struggling. Now we're pressing highs, and almost every other market is struggling. So it's almost like a total reversal. If you remember, the dollar made a huge move as part of that. And so I don't think it's a coincidence that you see the dollar making this big move up and all these world markets going down. So if I pull the dollar up, you can see how the dollar went from lows to highs. And then if I push back over and look at the world markets again, and as we look through each one of them, you're going to see that they, for the most part, have pushed down while the dollar has gone up. And the real story here is that this dollar probably isn't done. Here's the weekly. You had volume coming off on the weekly. Let me see what the monthly look like. Okay, so on the monthly, you pressed the highs with volume. So, yeah, I don't think the dollar's done. So if the dollar's not done, then at some point, after this digest this big move, the dollar's going to try to make another run. And when that happens, I think these world markets are going to probably take it on the chin again. So let's pop through these. Here's the all ordinaries. Getting a decent bounce finally. The Indian market, the Sensex, it's range trading at the tops. The only one that's really breaking down now is Brazil. I'm sure that has a lot to do with the elections, because it looks like the incumbent's going to win, and the market doesn't like that. France, if we go back over to Europe, as I could just go down the list here, it's doing the retest regen off this low. It will be curious for me to see if it can recapture it tomorrow. If we look at the FTSE, much weaker, bouncing but much weaker. The DAX is doing the retest regen as well. Skipping back over to Asia, the 8 shares in Hong Kong, they're struggling at the lows. The Hong Kong market itself is struggling at the lows. I mean, it's just, right across the board. The Nikkei is the only one that's really trying to pick it up now, and a lot of that is the weakness of the yen. And that market is directly tied to the yen as an export market. So, world markets looks to me like they struggle, going to continue to struggle. So I don't see that doing anything for our markets. Maybe this is some large topping process. Maybe it's not. Clearly right now, that's not what we should be worried about. What we should be worried about is what's going to happen over the next couple of weeks. And we're in the midst of earnings. Some of the earnings are really good. The majority of them are okay. And then you get some like, Chipotle got hammered pretty good. Amazon getting hammered tonight is down. It was down like $30 or so. But Amazon's been a lost cause for years. I understand that they dominate their market, but if you never make any money, eventually you got to make some money, and they always seem to lose money. Kind of reminds me of a couple other companies that are that way. They're always stocks bid up, but they never make money, and that's kind of a strange case. Let's see here. So world markets we covered. I had some interest from someone in the bond market. Let me pop over to it, and then I'll go to the gold market. Here's the bonds. We had talked about this thing pulling back into these swing point highs, in particular this one. You got the volume on that one there. This one as well. If you take the intersection of those two, which is right about there, you can see we're coming right back into it. So this is the area, if one wants to consider the long side, it's here. Again, that suggests to me that we're getting to the top side of, where we're going on these equity markets. We're getting close. Just as we're getting close to a buy here, we're probably getting close to some sort of a, profit taking there. So those seem to dovetail. And if I go over to the gold market, dollar is up again, gold's down. That seems to be a correlated sequence right now. Anytime you got dollar strength, it's pretty hard for the gold market. The gold actually did hold pretty well today. Gold is coming into an area where it has to hold, and that area is the top of this bar to the bottom of that one. That's where the support zone shows up. If it can't hold here, it's going to go after these lows again, and if those, it's not that far from the very lows again. So gold market's in another one of those predicaments where it needs to do something. Now, frankly, with the dollar probably range trading, gold can range trade too. So, gold can trade in some sort of a range like this pretty easy. It's about in the middle now, so it doesn't seem to be that interesting of a trade if that's what you're thinking about. I had another member asking me about UNL. Boy, this market just, we'll pull over the monthly. Now, this is a 6-month forward futures contract, basically. And, eventually this will find a bottom, but it sure looks like it's going to test again on the lows. So, I don't know. That's a tough market. That's a really tough market to trade. Okay, let me go over to the concept for tonight, and that is range trades. So I'm going to pull up, let's use the S&P 500. I'm going to pull up the S&P, and we'll use it as kind of the guinea pig here. In my third book, I talked about range trades, and I talked about range trade setups and how to trade them. And one of the things I talked about, and I want to pull up the weekly chart, so let me grab that. One of the things I talked about is, many times ranges will set up off of some sort of a blowout move on the top side when you're spiking higher. That's not what we got here, but we do have a range set up nevertheless with a spike on the downside. Now, a lot of times you're going to get volume as stocks pull back. It's just the nature of the beast. Markets always go down faster than they go up, and there's always, shall we say, throwing just throwing everything out. The fear seems to be a lot more intense than greed, and so things get dumped. And that's kind of what you saw here as we spiked down. Now, many times these things will get tested, and sometimes it's fairly quickly, and sometimes it's a long time. A long bull market can go for a long time without those tests. But if you pull back and we can pull up a monthly, for example, you'll see that most of these things do get tested. Like here's a big spike down, and then it gets tested. And there was a big spike here, and then it gets tested, right? So you get an undercut, you got less volume, and then you make your run again. So if we are to get that sort of test off this spike low, you would expect this thing to roll back over and test it here at some point. But I've seen these things go untested for long periods of time. So I wouldn't get bent on the idea, especially with the extra strength that we saw today, of that thing getting tested on a very short-term basis. If we end up building out a large range, then maybe it will happen, but I wouldn't bank on that, I guess is what I'm trying to say. But if we take the range, just you got a spike up, or not a spike up, but a run up, and now you have this range, and the question always becomes, and I've got the weekly up here, the question always becomes is, what is the range? And I like to try to look at these things on kind of an equidistant, basis. So in other words, if I draw this in here, the one up above it is almost the same, and they're almost equal in size. And that typically gives you a good feel for where a range is. So you kind of got two ranges inside this big one. Well, you can see we're almost halfway up in the top range. So if we now take this chart and we get off of it and go to the daily, and I'll pop that one up. So now we know that we're kind of in the top half of the large range. And so that top half being up here, the bottom half being down there, and maybe it's a little bit higher up on this, but anyway, it's somewhere up in this area. The question then is, okay, what do you got inside that? Well, you got two ranges inside it almost, right? You kind of got one here, one there. So you can just keep, subdividing. Now, you don't want to go stupid with this, but you can see that this is the key area on the way up because it's about halfway up. It also, and I'm always looking for these, it also, there's a congestion area here where a lot of trading took place. And some high volume bars, some decent sized bars were there, but wide price spread certainly. So that kind of becomes the target, right? Because it usually trades to these targets and then tries to, mill around there. It didn't in this case, straight up V-shape. But certainly now that we're even farther off the lows, if we get up here immediately, that's going to be a tough area to get over again. So if I'm trying to decide where the range may be, I first would have thought it was here, but it didn't stop there. So then I have to broaden it and say, okay, the range probably is this big now. Okay, if it's this big, as I get towards the top of this, I probably want to take some profits. And if it's a two-way range, I want to short it. If it's a one-way range, I don't, and I'll get into that in a second. As it gets back down, right, to this area, that's potentially a buy of this smaller range, or you simply wait and see if you can get all the way back down here and you buy the bottom of that range. The ranges are good initially, depending on how big they are, for some period of time, and that period of time usually is about 2 tests of each side. And those 2 tests, the third test, I usually don't want to try to bank on it holding anymore. So usually about 3 times up or down is about all it can stand. So, it's good for 2 or 3. So what is this? This is the first time up. So if it gets up there, it's probably a pretty good area to consider taking some profits or shorting, depending on whether it's a one-way or a two-way range. So let's talk about that real quick. What is a one-way range? A one-way range is that I only want to trade one side of it. In other words, I want to buy, in this particular case, I would want to just buy the bottoms and maybe take a little profit off the top, but not short on the top. Why would I do that? Well, because the strength is to the upside. Now, how do you know that, or why do you think that? Well, because we know the trend is that way. And so in this particular case, we know the trend has been up, right? Now we're doing some sideways stuff. And when we get up here, maybe we want to take some profits, but we don't necessarily want to put shorts on, because this thing is sometimes stronger than you think, just like today. And so if it's that way, and if you start to believe it's that way, then why would you want to risk the shorts? Take some mild profits. If it goes up even more, you know, odds are pretty good that you can at least get back in where you got out of some of those profits. But you don't short. You don't take the loss on the short. You just simply take some profits off some of your existing longs, unless you don't have any. Hopefully you got some. Then you wait for it to pull back. You pull back to the top of this range, right? Or as we were showing earlier, maybe it's a little higher up. But then you do some buying on the way back down. So, and that's good for a couple times. And the ideal in there is that, you know, say you got 1,000 shares of something. You sell 200 or 300 at the top. You try to buy 300 or 400 back towards the bottom. So you're trying to build the position larger. And you're doing that because you're assuming that this overall trend is going to continue eventually. And, you know, that's what you're doing. That's the idea behind it all. So it's a way to accumulate shares while you have the congestion consolidation taking place, on the assumption that the overall trend will take back off at some point. And it's a way to do that with the ideal of trading it just one way. Now, if we really thought that this thing was, you know, well, actually a good example of it is the Russell. If you really looked at the Russell and said, okay, this thing was a two-way range, in other words, we had a bunch of swing point lows lined up at the bottom, we have a bunch of swing point highs at the top. I want to trade this two ways potentially because it's congested for a very long period of time, right? And it kept showing us the potential to break down. And once it broke this swing point low, it wasn't a bad bet to try to play it down. But that's, you know, that's a little different picture. That's been a lot weaker than what we've seen here. Now, maybe this will set up as some sort of a large consolidation over a longer period of time. You know, we may look back 6 months from now and this thing still be, you know, going sideways here in this range. Well, then that kind of changes the picture, you know, because why? Because you didn't get that continuation up. And then you can start thinking two ways if in fact it does something like that. But right now, I think you have to think of it one way, especially when it keeps giving you more strength than you think, which it certainly has on this run higher. So just some ideas about, you know, range trades and how you might want to try to trade this thing. Do recognize, you know, this thing will pull back. They always do, especially when you have this kind of percentage gain in a very short period of time. You just can't try to trade it. I mean, today proved to us that you can't try to trade it short. And so it's not to be traded short, it's to be buying weakness when it finally shows up and trying to sell into some of this strength with some of the existing inventory that you have, you know, keeping in mind that if it does continue up, eventually you'll get that retrace and you'll probably be able to just buy it back about where you let it out if it does that. Folks, I'm going to leave it at that. Thanks for joining me. Have a good day tomorrow, and I'll see you next week. Take care. Until next time, good night.